Well, I've got good news and I've got bad news. Which one do you want first? Welcome to the Jim of All Trade channel. Glad you're here. I have another exciting video to share with you. I'm going to try to keep it short today, but I do want to do a little teaching along the way. Today, I want to talk about what I think the updated Elliott Wave count might be, could be. As a potential I haven't talked about much, but looks like it's presenting itself. Secondly, I want to talk about proportionality in Elliott Wave counting. And I want to talk about what triangles and consolidation means from a market maker standpoint. All right, so those are my goals today. That's what I want to go through. We're going to focus on Bitcoin today. Litecoin is going to follow it. I've already kind of given some price targets and they're still intact. All right, so let's jump in. Don't forget, I am not a financial advisor. I'm not here to financially advise you. I'm here to show you how I trade and show you how I spend my finances. So I hope that helps you. And let's jump in. What we're looking at here is the Bitcoin chart on the daily. And let me just give you the good news first so you get excited, okay? I believe right now, this is my belief system right now, based on the information that we have, that we will be going up to drum roll, please, as Crypto Kirby says, Don Carbonaccio says, yeah, whatever. That guy's so funny. I think we're heading up to the $9,500 mark, to the $10,000 mark. Let's throw a line on this structure. This came down, it came back up. We found support here on the downside. Looks like 98.74. Let's see how close that is. Maybe if I get it there, 99.99, $10,000. We're probably going to reach resistance at the $10,000 mark. That's where I believe where we're headed in the long term. So that's exciting. I want you to be ready for that push. So here's what I think the count is in light of that. And let me tell you why I think that. First off, I think this is a one wave followed by a two. This whole thing is three. This whole thing is three. And then we're coming down for four. Don't know exactly. We're gonna dive deep into that, see where four could come down to, and then the five is gonna come out. And look at the structure of that wave. That looks really, really, really nice, especially if I just kind of close it in. Does that not look like a great Elliott wave? It really does. Okay, it's got an extended third. That means the fifth wave is going to be smaller than the it's going to be more like the one, but probably a little longer than that. All right, so let's look into this and just talk about proportionality. The reason I think this is the count, and because I was thinking earlier that this is a three and this is the four, and we've gone up for five. I guess hey guys, listen, that I guess is still a possibility. What I don't like about it is this little dinky four wave. I just don't care for it at all. I need to four waves, man. We see a lot of chicanery and shenanigans, as a friend of mine says. You know what? You see, just shenanigans all in four waves. If I had to guess, this right here is a big four wave in the market. This is just a gigantic four wave. That's what I'm thinking. But anyway, that being said, I think this is kind of the count. Let me tell you why. Number one, proportionality. As you just look at the size of this wave, and then the size of the four. So this two wave should be somewhat proportional to the size of the four wave. They should be relative to each other, proportional as you just look at it and feel it. So it looks like we're making the four wave. The second thing is you can see how the sub count of the three right here of the third wave, you can see how the waves are just kind of proportional to each other. So you've got one, two, three, four, five. That is a four wave, but it's a four of the three, and this whole thing was an extended fifth. And so there it is, the third wave count, and I think that's in. So I think that's finished. So the bad news, we are, in my opinion, going down from here, but the question is how deep. So let's explore that possibility. I want to remind you that these are possibilities. These are not definitives. So this is what I'm thinking at this moment based upon this information. Okay, let's dive into the 1 hour and jump in and see what we can see. All right, what we've got going on here is we have a top, okay, and then if we throw the fibs on this guy, this is a tough one to see. Let's see if I can get my fibs on there. Right there, there we go. You can see how this came down to a corrective level, though it wicked down to 1618. So the question is, do you exclude that wick and just count this, or do you keep the wick? That's a really, really tough one. I'm going to exclude it because it looks like an outlier for now. So for now, we're just going to exclude this wick, and we're just going to think, okay, this is a 1-2 or an ABC wave, okay? But it was followed by an ABC wave, or this is 1, 2, 3. We're putting in 4, and we got to go up for 5. So there's still that possibility that we're going up for 5, especially after this. Just while I'm making this video, we had this little move right here just happened. It's making me think, just again, shenanigans and whatnot. So let's just draw this trend line to see what's going on. We had a break here you see this, how this trend line runs across. We had a break of that trend line, and then what we've just done is retested it. I'm expecting to see a bounce back from that, but I know I'm a little off target here, but this is just happening in the market now. If we don't see a bounce back from there, if it crosses, we may have some upside. Okay, and we'll look at that in just a minute, but I believe we're going to see a bounce off of this, and we're going to head to the downside. We'll see. That's my belief system right now. But again, I don't just operate on just belief system. I operate on what the market is giving me at the time. Okay. All right. Now let's get back to what I was saying. So we have an ABC coming down. We've got this. And this one came down to, if you include the wick, it came down to the 1618. But then it reversed and went against it. Then we had, if you put the fibs on this one. If you use the wick, it comes to the 1276 and it stops, okay? If you use the wick. If you don't use the wick, it comes to the 1618 and stops. And so the question is, do you use that wick or not? If you don't use the wick, this is corrective. 1276 is a corrective wave. That's an ABC, okay? So we've got an ABC potentially, then we've followed by an ABC, or this is a one wave, 1, 2, 3, 4, 5, and that wick counts as the fifth wave. That's hard to tell. Followed by an ABC. That's a big 1 and a big 2. My gut is that neither of those is correct. Well, not neither of those, but this is actually just a big A, B, and then we're coming down for a C. Now we got a little shenanigans going on right here. We are breaking that line. I just want you to see that, and we'll kind of take a peek. Let me jump over to Litecoin here. That's the one I trade the most. Yep, we had a break down, and then we break back into the range. Often the market makers will do that. They will do a false break out of the range, and then they'll break back into the range. Now, if I change the trend line here just a little bit. Sorry guys, I'm kind of doing some analysis on the fly here because I'm a trader, and I want to make sure I don't miss any kind of movement that's happening. I want to be ready for what the market gives me. If I change that trend line just a little bit, it actually keeps it in that range. And so I think we're still okay. I think we're going to hit to the upside. We're going to talk about what triangles are for, what they're designed to do. So I'm gonna help you, and we're gonna talk about how they expand the range and change the range a little bit and keep consolidation going. So I'll talk about that in just a minute. Okay. All right. So basically, what I'm seeing here, we had a break of the trend line. We've got a retest of it. If it bounces back, good. If not, then we're heading down. We'll see. But let me draw another trend line here from this peak here. We'll skip that wick for now, and we'll just draw it up to here. And if we do that, okay, get out of my way. Guys, I feel like I'm all over the place today, and I'm sorry about that. But, man, just kind of lots of stuff going on today. If I do that, get off of my screen. There we go. You can kind of see the makings of a triangle being formed, potentially. It could be a flat as well, which that would make this down here. We'd have an A, B, and a C kind of coming down right here. So these are the potential things, but this is what I'm expecting in this large nature. You notice how slow the market's been moving. It's in consolidation and accumulation. Now, I guess that brings me to the next point. What is consolidation and accumulation? What is that? Why do they do that? Basically, let me just kind of show you why they do it. Okay, so here you can see that there was this triangle formed right there, right? As it was being made, this is what I had drawn on my chart. right? And this is what happens. Price came down strongly in three waves, and what happened is that triggered a bunch of sells in here, a bunch of sells, and a bunch of sells in here as well. And then when price came down, more sells were added to this. Okay, so that's exactly what. So this down movement created a bunch of selling pressure. Okay, and what happened is as sells were generated in this area. By traders, the market makers took the price hard back the other way. Now that doesn't bother traders because good traders wait for that retrace, and so there were a bunch of sells in here, and they worked this range for quite a while, and then they go down with. Towards it to confirm for those traders that enter into sells, and they confirm it to the downside a little bit, but then what do? They shoot up really fast. Okay, and what that does, that traps all of these traders who sold, that traps them in their trade unless they stopped it out. Now, so if they're trapped in this range, they don't go too far, because if they go too far, they will trigger their stops. So then what happens is that this up movement produced a bunch of buys. The FOMO buyers bought up here. Okay, the good traders, the better traders, waited for this retrace, and they bought right here and on this and in this secondary wave here. They waited for price to confirm to the upside, and they started putting in their buy orders. But what happens? Boom, they take it to the downside. And so what do? They trap the traders in this region as well. Okay, so you got trapped longs and you got trapped shorts, right, in both of these regions. Now, when they bring price back, they don't come all the way down here to let these traders out of their trade. But these traders are encouraged because they say, oh, price is coming down, so they just wait it out, even if they're into a negative balance at that time. These guys are getting a little nervous, and so what price reverses again, it's coming back to their price. It doesn't come all the way back, so it doesn't let them out of their trade, but it gives them encouragement that price is moving in their direction. So these guys get frustrated, but then the price comes back again. Okay, price is moving, and so there's this oscillation, and they're collecting buys and collecting sells, collecting buys and sells, and they're accumulating orders and traders that are stuck in positions that hold that position for a little while. Then what they'll do is they can either break to another price level, or they can do a false break, and that's what they did this morning. Basically, they've done a false break. What they do as they've accumulated orders. Let me explain now what they do is when they want to take price to a particular level. What they do is they will break to one side. What this does is that this gets everybody who's short excited because it's going their way, and then there are more shorts that begin to be put in here, and so people start going short right here. So the sells are making this price go down. However, these guys, the trade hasn't gotten away from them yet, but they're like the buyers here, they're like, I'm going to stop this trade out. So to stop a buy out, you have to sell, and so that triggers more sells and fuels the price for sell to the downside. Okay, now if there's a fake breakout, there's an expansion of that range. Okay, so they'll break out just smallly, just a small amount. They have retraced back, so I am looking for a movement to the downside. That's usually what happens. Okay, so this is what I'm waiting for today. But if price crosses this trend line and crosses this one, it's going to be an expansion of the range. Or what's happened is this becomes our new trend line, and now we have an expansion of the range. Like that, and all that does is that allows them to continue the consolidation, and so they can still bring. Oh, come on, let me get my paintbrush here. They can still bring price up, and they can bring price down, and bring price up, and bring price down, and they'll just do this for days and hours, and it's just like it'll lull you to sleep until one day, boom, it breaks to the upside, or boom, it breaks to the downside. Okay, so this is kind of what they're doing, and this is how they move price. They need all the traders and the people buying and selling in this market on a regular basis. They need them to move the price, and so this is how they do it. Isn't that a beautiful chart? It certainly is. Okay, so how do we take that information and then apply it here? Well, we had this little trend line here. I was expecting a break of it to the downside. We've had a break and a retest. Usually what that'll be is a break, they'll hook back, and then it'll go. If we don't get the go, so we've got the break, we've got the hook, now we're waiting on the go. If we don't get the go, then what they're doing is expanding the trading range, and my trend line should look more like this. for now. If that's the wrong trend line, this could be the trend line right here. This upper trend line still is intact. Let me get this off the chart so we can be a little bit clearer. There we go. And so you can see how they're expanding, price movement in there. So let's see what they do. I'm going to leave both trend lines there on my chart. That's how I kind of watch and see what the market makers are doing, so I can know how to trade it. So anyway, yeah, that's what we're looking at. They're expanding range, consolidating. My gut feeling still is that we're coming down here. Now, is it possible that we go up? Yes. What would the count be if we go up? Remember the scenarios. If we go up, this is our one wave followed by our two. This is our three, and we are making our 4 as a triangle. That means 5 is coming up here. But if we go up now from this area, guys, we're only going up to about $8,600, and that's a prime bull trap play. So be aware of that. So if we go up from here, most likely we are only going to hit $8,600. That is a scenario, and then we're going to be coming down for a steeper correction. Okay, you need to understand that. You need to know that. All right. Secondly, if that doesn't happen and we break down from this area, which I would rather see personally. Okay. Well, I would be okay with either of these scenarios, to be honest with you. I'd be okay with either, but I think I'd rather see this one for now. I'd like to see a breakdown to this trend line, unless a triangle is being formed. Let's see. I can draw another trend line from this area right here, this way. So, whatever the shape of this thing is, I don't care. But I'm expecting a deeper correction, probably down to make a flat. If I put the fibs on this, this is a 1 followed by a 2 right there. Looks like we'd be coming down to the $7,000 mark, 72 to 7,000. So that's kind of what I'm thinking and looking at. That trend line would actually be perfect if we use the wick. Okay, and so basically price would look something like this. Do, and then up and then down. And that would be a great triangle. That would be a triangle. A, B, C, D, E. And then, guys, you know what happens after E? Do you know what happens after E? Boom. That's what's going to happen after E. We're going to, and from there, we would be going up to the $9,500 mark. That is what we're looking at. Okay, there's your analysis for today for Bitcoin. So what should you need to be watching? Okay, as a trader, you need to be watching a couple things. Does it break this top trend line? If it breaks this top trend line, watch and see if price breaks this right there. If price breaks that, we're going up to 86. Okay, that's my target, 85 to 8,600, in that ballpark. After we hit that, expect a down move. If price does not come up here from this area, expect a down move to this trend line or somewhere in this region. We'll have to watch and see how it plays out. And then once that happens, once this all plays out for days and days, to the end of the month, it looks like, who knows when. I'm not going to put a win on it anymore. I always try and I always fail. But anyway, as price comes down, we should expect to push up to the 95, and that's going to finish our 5 waves. Then we're going to expect a steep correction after that. So this is where the market's heading. So we've got to really watch price today. That gives you something to look for. Hope you guys have a fantastic day. Hey, would you hit the like button? Would you subscribe to the channel? Share this video with somebody. Leave me a comment. Hey, tell me where you're from. Tell me if you watched to the end of this video. Just say in the comments, hey, I watched to the end. Thanks for the information. Something like that. That'll just keep me encouraged. Okay. Hope you guys have a fantastic day. And happy trading. Just be safe out there.